back with the market right here on ET now, and we're just counting down to the market close this budget Sunday. And what a vicious fall it has been. Look at that. It's a 300-point knockoff on the Nifty futures alone. You are currently just about holding around the 25,100 print. And I'm just looking at the individual stocks. Before that, the market breadth. Within the F&O pool itself, it's a good 163 count that you're seeing right now for the reds, with 49 names standing to the greens. The greens, of course, are very minuscule. Keynes, Paytm, the technology names, Titan has spurt up, Kalyan Jewelers, Amber, these are the ones. But it's a huge list when it comes to the declines. MCX is down 12.5% right now. Hindustan Zinc is down 9%. Their entire defense trade has completely reversed. I mean, to think of it, BEL was actually one of the top movers on the index going into budget speech. That is a rank underperformer. So is BDL. Muthoot Finance is down 7.6%. Angel One is down, and BSE as well is cracking pretty hard. But let's track the last minutes of trade with Kunal Bothra. Sandeep Sabharwal as well joins in back in the studio right now. Sandeep, let me come to you first, meeting you first time after the budget speech. Other than STT, what's disappointing or spooking the markets, shall I say?
So I think the other thing spooking the market is this gross borrowing figure, which I don't think should be such bigger concern, because people believe that the government will borrow more, and as a result, the rates will move up. And that's the reason why financials sold off after that gross borrowing figure came out. But net borrowing is the same. So I don't think it should be such a big impact. So maybe once some clarification, etc., come, so that could get reversed. So overall, the only negative thing was this STT thing, which was unnecessary, but it's done now. And otherwise, overall budget was okay. And like the buyback capital gains tax move, I think that's a positive, because many companies are cheap, and many cash-rich companies which were not doing buybacks, they might decide to do a buyback. So I think that's a good measure. Otherwise, economy-wise, most of the measures announced seem to be good for long-term growth of the economy, but nothing to shake things either side, not on the positive, not on the negative. And the main concern which was expressed during the economic survey, as well as some commentaries prior to the budget, was on the foreign exchange rate and the FI outflows or the foreign capital outflows. So nothing was done to address that. They are trying to adjust it via easing the foreign trade and boosting exports, trying to boost exports. But that's a longer-term solution. That will play out. I think the relaxations announced for exports, etc., the ease of doing business are substantial. It will help in the long run. But in the short run, it doesn't help.
But Sandeep, I think the question now to grapple with is, what happens tomorrow when the institutional investors as well come in, when global markets will also trade? How much of the damage of this STT will last? How long-lasting, rather, would it be?
So specifically, the STT impact will not be very long-lasting. And if the rupee remains stable, so I don't think the foreign investors will also be perturbed so much. So I think it's a question of how these things pan out, how the rupee moves, because post-market rupee actually, after whatever happened on the commodity markets and US dollar rallied, so in the NDF markets, the rupee actually rallied prior to the budget. So whether that rally can hold or whether we sell off, and how the bonds behave, I think that will determine how the markets will do.
Okay. Kunal, let me come to you. Some of these commodity names, good time to nibble on to at all, especially some of the commodity-related names, something like an MCX, something like a Muthoot. You're just speaking about that. Good time to maybe start buying, if at all you're looking at the charts?
Not really, I would believe, Harsh. So even the price-wise, they would look attractive. So for example, Muthoot Finance, I think, has come back to the last 3 months. Yeah. I think after this correction of sorts in the last couple of days. And same is the case with the likes of M6, etc. But I would believe that you need to buy at a point when the volatility subsides significantly. We are not at the peak of volatility, but we are also not at the point where the volatility has subsided, or at least shown some signs of receding. That's going to be a point where I think traders should try to look at investing into these kind of names. So yes, price-wise, they may look attractive, but I would believe that because of the fact that there could be a zone where gold prices, silver prices may go into maybe one more leg of a correction, even though it could be a little bit more milder than what happened on Friday, but I think that probably opens up slight more downsides for many of these names.
Sandeep, do you buy this fall right now in the market? Budget or no budget?
I think next week, some stage, it will be a buy. So I don't fundamentally see a substantial fall from current levels because I think a lot of negatives in the Indian markets had already got built in. And this is because it doesn't change the earnings picture negatively. So, and ultimately my reading of the results as well as post-result commentary of companies is that things have stabilized and things are improving across sectors. It's not that things are deteriorating. So in that context, we don't have to be excessively bearish. So I think sometime next week, if it falls similarly on Monday, if it does, then I think those levels could be decent levels to buy.
Kunal, would that if be a will, it will fall?
It should fall a little bit more because, today we all know that there is lack of participation from, major investors. So that probably opens up window tomorrow morning that maybe there could be a bit of a sell-off. But you need to wait for that point when the sell-off is a little bit more exaggerated. So, that's the zone. For example, I mean, just to put it into context, there was a point where today many of the commodity and metal names, they opened on a significantly very sharp gap down mode. But then there was some bit of buying which was there just to adjust the kind of exaggeration which was there. So we need to wait for a point. And that's why I think short-term traders should not try to just about buy this kind of a dip today for the indices. Just wait for maybe another couple of days. You probably get better levels on the indices.
Sandeep, there's been an exaggerated fall in both defense and PSU banks. Whereas, frankly, there was nothing negative in the budget about either of them. You believe that that fall is warranted, or we were built up, or positions were built up towards exuberance, which hasn't come through? How do you read the moves today, at least, in particular?
See, PSU banks are very sensitive to bond yield movements. So there is an expectation because of the gross borrowing figure, the bond yields will move up. So if they don't, I think the move in PSU banks could typically reverse. On the defense side, like you are very right, there is no negative at all. So the companies function as they were. Whatever orders they are getting, whatever the defense procurement targets are, all of them continue the way they have been continuing. So whoever wants to buy defense stocks, this correction provides an opportunity rather than this being something where you want to actually sell and get out.
So Sandeep, other than defense, once the dust settles down, like you feel next week, which is tomorrow onwards, today is the Sunday, what would you buy?
So I think auto stocks got sold out after the EU deal. And the numbers are very strong. The numbers which came out are very strong. Most companies are saying the inventory levels in the markets are just 4-5 days. Usual levels are more than 15-20 days. So I think that replenishment will happen. So I guess auto is one sector which was an outperformer, has seen some sell-off, is a sector to look at. Then I think construction infrastructure companies is a sector to look at because I think there also the stocks are sold out, but then the order flows and the results are not bad at all. And financials, if there's some more correction, then obviously financials also.
What within infra do you like? X-L&T?
So among the larger company, L&T, among the other companies like on T&D side, I like Kalpataru Power, so that's something which we own. On the pure construction side, we own Ahluwalia Contracts. And then on the water side, we own VA Tech Webag, which has also got sold out for no specific reason. So I think there also the growth and earning picture looks exciting. So I think these are a few other ideas.
We're 2.3% lower now. The fall just getting steeper and steeper. 575 points, the fall now. Kunal, warranted on the index, 575 points.
Some sort of a disappointment, of course, with regards to the STT. And that's, I think, one of the reasons why the markets are not liking it in that sense. But whether we call it warranted or not depends, I think, in the context as such. But yeah, I think, it's an adjustment the markets have to make with the kind of news flow which keeps on developing.
What levels does this open us up to? 24,750 now is what we're touching.
So I sense that we could now probably be looking at the lower band of the range being tested, which is 24,500. I would sense at least another 200 to 50 points cut, which could happen in the next couple of days, if not happen, if not tomorrow.
Okay, more disappointment in the pipeline. We're a couple of minutes from close. And Monday is tomorrow.
I know.
So, I mean,
Yeah, this is not Black Friday. This is Black Sunday.
Sunday. Historical Sunday for sure for equity markets. I mean, who would have thought that a budget will be on a Sunday and equity markets would trade and they would trade the way they are.
Largest
but anyway,
fall on a Sunday.
Widening.
Yeah. I don't know if that kind of counts. I just pulled that statistic out.
Yeah,
anyway,
but-
sorry, please go
Yeah,
ahead.
that is definitely a glaring statistic for sure. Look at that, 300-point fall in the futures right now. The Nifty, of course, breached that 25,000 mark. We're closing in with just Wipro, Titan, TCS, Max, Amber, etc. And Paytm and Canes, of course, holding out. But on the flip side, the damage has been quite steep for an ONGC, for an SBI, for a BEL, Hindalco, Adani Ports, ITC, Adani Enterprises, Eicher, Bajaj Finance, Maruti. Reliance fell 2%. Asian Paints has fallen a little bit more after its fall last week. Tata Motors passenger vehicles. I mean, even though their monthly sales numbers were fabulous, I think it was about, what, 46% I recall seeing in the morning, the total sales uptake on a year-on-year basis alone. But yeah, the stock has completely caved in this market fall. And look at some of the budget-sensitive trades. MCX down 12.3%. You've got a BDL down 7%. Angel One has cracked hard by about 7.5%. BSE as well has had a similar picture and an OI build-up of almost 21%. 7.25% crack for BSE. 25.97 on BSE futures. Even a Novama, etc. The capital market plays, of course, got it very, very hard in trade. So that's that then. But Kunal, the message to people who would be itching to trade right now, don't catch a falling knife.
Yeah, absolutely. Don't catch a falling knife, and I think there could be more volatility in store. I don't remember the stat last time that, on the budget day, post the deliverance of the budget, when has the volatility index spiked? And today's fall, adding to that, the India VIX tells you that there could be slight more pain, which could be still left in the market.
Sandeep, let me come to you and let me talk a little bit positive about this now. What do you buy in this dip? Because it's clearly now a dip. So what do you buy?
So like we were discussing, auto stocks or related, some ancillary stocks could also get cheaper. The defense plays which gets sold off exceptionally, construction infrastructure plays, some financials. So I think it's not, so the markets are not expensive. The results picture is not bad and the outlook is also not bad. And ultimately, the markets are a slave of earnings.
Correct.
STT or no STT, the markets will ultimately be slaves of earnings in the medium to long term. So I think if you are not a trader, you look at these opportunities to buy. Because I think this sell-off will create such opportunities where then subsequently the year could be much better.
Okay, on that very positive note, let's wind it up here on this edition of the closing show. We're going to wind it up and thank Kunal Bothra as well as Sandeep Sabharwal for taking out time and joining us as always. On that note, we'll take a very quick break, but of course the budget coverage continues on the other side.